Hey, you remembered to hit record.
I did hit record. Sure did.
Morning.
Um, Good morning. There, I'm not sure how we get our thumbnails up there, but I see you. Um, Good morning, everybody. Thank you for joining in this morning to talk about the Corporate Transparency Act and business ownership, beneficial ownership reporting that's required this year. My name is Paul Mueller. I'm the managing director for the Mueller Pye and Associates CPA firm, and I'm up in our Loveland, Colorado office today.
Hi, I'm Robyn Pye. I'm in our Katy office today, co-owner of the firm with Paul, and happy to bring you everything that you never wanted to know about the CPA today. So thanks for
Great.
joining us.
There you go. So yeah, welcome everybody. Those of you that are used to being on Zoom and being in these Zoom meetings, and since the pandemic, who isn't? Who hasn't been on a Zoom meeting? As you know, if you'll move your cursor to the bottom of your screen, you'll see you should see a Q&A button there. We will be watching the Q&A going on. So um, as you have questions that come up, please go ahead and populate the Q&A box. If it's something that we can answer, right away as we're moving through the presentation, we'll do that. It might be that we might answer your question later in the presentation, but go ahead and be sending us those questions, and we'll try to monitor those as we go along. And we may hit a few transition points where we might pause and check the Q&A box and try to answer those as we can. If we can't answer your question during this particular webinar, we'll make note of those and do some follow-up on those as well. In addition, on this particular cover slide, we do have a disclaimer there at the bottom that we're probably all used to seeing those kinds of disclaimers. I guess in this day and age, we have to do those kinds of things. So today, complying with the Corporate Transparency Act, our focus today is to try to give you almost everything you need to know to be able to go ahead and comply with the act and file your business ownership information report. So we're going to talk about what needs to be done to get there. We're going to share what the portal looks like that you would submit your report through. Our goal today is to empower you with as much information as you need to try to give it a go on your own, knowing that folks may need some resources to help them through that particular process. So this is, since we're dealing with the government here, everything has to do with acronyms. So it's important for us to get the acronyms out of the way, and we'll probably use some of these acronyms during our presentation. So let's make sure we understand the dictionary here. CTA, that's the Corporate Transparency Act. We'll talk about that in a little bit as where that came from. BOI, that's the beneficial ownership information that gets filed as part of the reporting to comply with the Corporate Transparency Act. FinCEN is the Financial Crimes Enforcement Network, which is a group under the U.S. Treasury charged with overseeing these types of items. For some of you, you might be familiar with FinCEN because that's the agency that you file your foreign bank account reports with every year. Usually you file those along with your tax return. When you're filing your tax return with the IRS, you're filing what's called the FBAR with FinCEN to report if you have a foreign bank, brokerage, or other type of financial account overseas. And then BOSS, that's the database that FinCEN has created to be the repository for all of these BOI reports that it is anticipated there will be 35 million companies that need to file these reports. And they'll all go into this database called BOSS, which is the Beneficial Ownership Secure system. So we may throw out some of those acronyms as we go through this program, and it's just good to know what those stand for. So we have a common set of terminology here. The agenda for today is, again, like I said, we're going to talk a little bit about what the CTA is. It's a reality now. we're going to initially jump in to the portal that FinCEN has for BOI reporting to kind of give you a glimpse of what the finish line looks like. Those of you that have read Stephen Covey's book, 7 Habits of Highly Effective People, it's habit number 2 that says begin with the end in mind. So we're going to do that. We're going to show you what the finish line looks like, because we think that'll provide you a little bit of context as we go through the rest of the webinar about who needs to report, what gets reported, and when to report. So we'll jump into that in just a little bit. But before we do that, let's launch a poll here. And I hope this is showing up on everybody's screen. Robyn, you can confirm that for me. What do you know about BOI reporting? And there's 5 choices here, and I see folks are already starting to populate. The first I've ever heard of it. I've heard some, read some. I've been reading a lot about it. Number 4, I could present this webinar. And boy, whoever answers that question, Robyn, get their name, because we'll just turn over the mic to them. And I've already filed my company's BOI report. So we'll give everybody just a second. Looks like, let me see, we've got about 80% of the participants have answered the question. So I'll just give it a few more seconds here. 5, 4, 3, 2, 1. So let's share the results on that. So we've got about half the folks that this is the first they're hearing about it. That's awesome, because this is going to be kind of a primer to help you get started on what you need to do. Heard some, read some, that's about 40%. So almost 90% of the people are really looking for the kind of information that we're going to provide today. So that's really great. Some folks have been reading a lot about it. We even have one person who's already filed their BOI report. Maybe that's you, Robyn. You must have answered
I didn't answer the poll.
Oh, you didn't answer the poll. Oh, okay.
Well, but we have already filed ours. So
so the person who's already filed their BOI report, when we get to changes, updates, corrections, all that, that may become real pertinent for that particular individual. So good. Thank you, folks, for doing that. So let's go next. So what is this Corporate Transparency Act? This was something that Congress, I believe, began debating or crafting in 2020, and then they finally enacted it in September of 2021. It's an anti-money laundering initiative. And, you know, I don't know, I'm an accountant. I don't know how to launder money. I've seen movies about people that do money laundering. I've never really understood it. I saw the Ozark TV series, never really understood what the heck they were doing. But there's a concern that with the use of LLCs, corporations, there's an opportunity for nefarious individuals to hide behind these entities and be doing illegal activities. And so the purpose of the Corporate Transparency Act is to lift the veil, basically, of these business entities and get to the actual individuals or people that are behind these entities, that either own them, control them, that these are the people that the Treasury wants to identify as the man behind the curtain, so to speak, using a Wizard of Oz analogy. You know, who's actually pulling the strings on these entities. And so the idea is they've created this BOSS database that we're all going to start filing these beneficial ownership information reports, so that the Treasury can begin to slice and dice that data, begin to piece perhaps some of the jigsaw pieces together on complicated structures to see who's actually behind some of these, as a way to perhaps identify where bad acts are being committed. So how you report, all the reporting is done at this website here, which I'm going to share here. Let's see. Make sure I get to the right screen. Yeah, I must have, oh, here we go. There we go. Robyn, can you see that, the hub?
Yes.
Yeah. So this is what we refer to as the BOI hub from the Financial Crimes Information Network. When you are ready to file your report, this is where you'll go. And of course, that link is that I have in the presentation is live, and we can certainly share a PDF of this presentation, which will have all those live links. We'll talk about that later. But again, looking at the finish line, this is where you'll come to actually file your report using their e-filing system. Those of you that are familiar with the FBARs, you know that those FBAR forms are filed electronically as well. So if you've done an FBAR before, some of this is probably going to look a little bit familiar to you. So this site also has a tremendous amount of information about the Corporate Transparency Act and these beneficial ownership reports. Probably one of the most helpful sections on here is the FAQ page, which continues to grow as I think more people post questions or FinCEN comes up with answers on certain issues. They're continually populating this FAQ page, and it's pretty much up to date. There is a chat feature. Say if you're in the middle of trying to do your report and you're stuck. I've not tried that chat feature, but I understand it's pretty robust. So, that may be help for you as well. But let's get into what it looks like when you're ready to file the report. And you go over here to get started. Get started. There we go. You're always afraid that these systems are going to crash when you're trying to use them. This is your first decision point as to how you're going to file, and you have basically two primary options, and there is a third, which I'll just mention briefly, and we'll get into it a little bit later in the presentation. But you've got a decision here as to whether you want to download a fillable PDF and fill that out on your own and then upload it later. And Robyn has, later on in the presentation, Robyn has the PDF and is going to walk through what some of those forms look like. Or you just go straight to the portal and fill out an online submission form and you're done. So which one should you do? I'll just share with you some of our experience with filing the BOI report for our CPA firm, which we did, I think we did like late February or early March, not because we were in a hurry, but because we wanted to see what the end user experience looked like, so that as clients asked us questions or we were preparing for this webinar, at least we had a view of what that side looks like. And frankly, we tried to download the PDF first, and that was our first learning experience. And you might want to make a note about this. When you try to download this PDF, don't use Google or Chrome. For whatever reason, even our IT guy couldn't figure it out. For whatever reason, Chrome and Google do something to that PDF that when you come back here to submit it right here on this button, you're going to get an error message that FinCEN can't read it. I can't open it, and you'll have to start all over. So after about 3 or 4 aborted attempts of doing that, we finally realized, wait a minute, let's try Firefox or Safari. If you use some other kind of browser, you are able to download a fillable PDF that seems to work just fine when you upload it. The reason for perhaps doing a PDF is, let's say you've got, when you're doing your report, and we'll talk about who beneficial owners are, but let's say you've got 6 individuals that qualify as beneficial owners and you need to upload their information. What's the chance that somebody's driver's license is going to expire or their address is going to change? And we'll talk about these types of changes that require an update. The way we did because we couldn't do the PDF originally, we did an online submission. Whenever there's a change that occurs using the online submission, you got to file a whole new report. Got to basically start all over again, re-enter all that information. Whereas with the PDF, since you've got all that information saved in the PDF, you just go in and change whatever new information there is and submit it. So Robyn, you just had this experience this past week.
So Yeah,
Yeah, go ahead.
so we did. We actually went to purchase a car and realized we had an expired driver's license on our hands, and so had to had to renew that. And when you have a change, expired driver's license, new address, excuse me, something of that nature, you only have 30 days to update the report. So the driver's license expired early May. So we're at the end of our, at the end of our 30 days, and all we have is a temporary driver's license. So I had to update the report. And since we had filed online, I had to start over, had to enter everything all over again, upload the new driver's license. And now I'm going to have to do it again because that temporary driver's license expires in 60 days. So then I'm going to have another expired document. So yeah, we definitely should have done the PDF because we'll be filing 3 times in 4 months. So
Yeah.
something to consider as you're making that decision.
So, if you have your business, you're the sole owner, there's nobody else involved, and it's fairly straightforward, you can probably do the online submission, and it's going to be relatively quick to do that. But if there's the likelihood that you could have multiple people involved who are moving, expiring driver's licenses, getting married and changing names, whatever it might be, consider doing the PDF download and save that somewhere where when changes do occur, it's much easier to do and upload. I'm just going to jump into the online submission. Again, Robyn will get into the PDF a little bit later in the presentation. But just to kind of show you how things are basically filled out, and I'm not going to go through and fill out this information. First of all, I don't want to make up fake information, nor do I want to share real information. But there's 5 tabs that you have to fill out. One is the filing information, and the number one thing is to know what report you're going to file. I'm going to assume for the most part that the people that are on this call and folks that couldn't attend but who will be getting a recording of this presentation, for the most part, we're probably talking about initial reports, because this is the first year that anybody has to file a BOI report. So the majority of the folks, those 35 million companies that are expected to file BOI reports, are probably for the most part going to be filing an initial report. So that's where you would get started. As you notice, that's the only thing on that tab. You're one down, 4 to go. We'll get into this in detail later on about what information needs to be filed, but you basically fill in some basic information about the company. Company applicant, which again, we'll get into this later on in more detail, but this is basically the person who formed the company, which might have been an outside attorney that you hired to help form your entity. Notice though, that if this is an initial report and your company was in existence as of January 1 of this year, January 1, 2024, this doesn't apply. So if you're filing your initial report and your entity's been around before January 1, 2024, you click this box and it's all grayed out. Can't touch it. So again, if you're filing your first report and your entity's been around for a while, you click that box and you're now 3 boxes in with only really 1 more to go. And this is the beneficial owner, which again, we'll get into this as far as who is a beneficial owner. But again, the information is fairly basic that needs to be submitted. Probably the most challenging aspect of this thing is we'll get into what's an identifying document. You're going to have to upload a picture, a scan, an image, something of a identifying document. And that may be the most difficult aspect of this whole application. If so, get your teenager or your grandkid to help you at this point. They'll know how to do all of this. You get all of that done, you fill out who you are, you agree, you submit, and that's it. You're done. That's your BOI report.
Yeah.
Going to come back to
Great
the
overview,
now.
Paul. Hey, Paul, I want to, can I take a minute and answer
Sure.
a couple of questions that have come in before we
Sure.
get too far down the road? Because this is a great question. So somebody's asking if the BOSS information, if that database is open to the public. So if you remember from the acronym slide that Paul just talked about, BOSS stands for Beneficial Ownership Secure System. So that's where they're going to house all of this information. And so the question is that information open to the public? The answer is no. So who can access that information? So federal and state officials who submit a request through the US federal government to obtain that beneficial ownership information for activities related to, say, national security, law enforcement, those officials will have access to the information, and then certain foreign officials will also be able to access that information. In certain circumstances, financial institutions can access that information, but I believe they have to have the consent of the reporting company in order to access that. So if I didn't answer that question fully, please let me know. Another great question that came in: am I required to file a BOI for a foreign business that I am a member of? So it is not a US company, but if that foreign entity, and I do want to preface, there are some nuances with respect to foreign entities and their BOI filing. Our presentation is going to focus primarily on domestic entities, but I believe the answer to that question is if that foreign business has registered to do business in a US state, then I believe they are required to file. So that foreign entity will be required to file. And we'll get into some more details on that in a minute. And so the rest of the questions I've seen pop up, I think we're going to get to, and those will be answered during the presentation. And if not, please let us know. And our contact information will be at the end of this. So if we don't get to your question, please, please feel free to email us.
And then one last thing I just want to report on how to report is the last bullet point on this slide is there are no filing fees for submitting these reports. You may want to hire a third party to help you with these filings, and the third party obviously will have fees, and we'll talk about that closer to the end of the presentation. But submitting the initial report, changes, updates, any types of filings through this BOSS portal, there are no filing fees. There are no user fees or filing fees on the part of the government.
Okay, so I'm going to jump in with who needs to file a report. Before I do that, I do see a couple more great questions, and so I want to answer those before we get too far. So a FinCEN ID is something you can request a FinCEN ID to eliminate the need to enter all of your personal information each time you're filing for a reporting entity. And so you are not required to have a FinCEN ID. That is optional. Okay, so let's talk about who needs to file.
And Robyn, let's just, in the interest of full disclosure, Robyn and I have our FinCEN IDs. When we filed our document back in February, we wanted to experiment with that process. We'll talk more about it later. It's very easy to do, but it is optional.
Yeah. So who needs to file a report? So if you meet the definition of a reporting company and you don't qualify for an exemption, which we'll talk about in a minute, then you must file a report. A reporting company is a legal entity formed by filing a creation document with the Secretary of State or similar office in the US. Not every state calls it Secretary of State, but and CTA does apply to both foreign and domestic, but again, we're mostly going to focus on domestic entities. So we've listed a handful of the most common reporting entities, beginning with corporations and then moving on to limited liability companies, and finally the various types of limited partnerships. So that's who needs to file a report, which leads us into who does not need to file a report. So this next slide is separate from who is a reporting company. So you have reporting companies that are exempt from filing. We're going to talk about that in a minute. The entities we're going to talk, or the businesses we're going to talk about right now, don't meet the definition of a reporting company. So that's why these entities do not need to, I keep saying entity, that's why these businesses do not need to file a report. So if you're operating as a sole proprietorship, you have not filed a document with the Secretary of State to form an entity. So you do not meet the definition of a reporting company, and you're not required to file.
So Robin, if I can just jump in on that, some sole proprietorships, they might file for a DBA or a trade name, but that does not create an entity. That's just a different name for the business. Filing for a trade name would not rise to the level of having to file a beneficial ownership information report.
Right, that's right. So generally speaking, rental, the ownership of a rental property or an investment property does not require you to file. However, see the big red letters at the bottom. If you have formed an entity at the state level to hold that rental property or investment property, now you're a reporting company and you're required to file. So what we see a lot is, a single member LLC holding rental property for liability protection. That is now you're a reporting company and you would need to file. So general partnerships, again, you haven't filed anything with the Secretary of State. We've listed some common trusts that are generally not considered reporting entities. And I want to make the point that while a legal document is in place to create the trust, that is an agreement between, say, the grantor of the trust, the trustee, and the beneficiaries. But unless you have filed a formation document, or in some states, I believe, do require that. So in some states, you may be, but in Texas, you do not have to file anything with Secretary of State in order to create a trust. So those trusts are not reporting companies, again, unless state forms have been filed to create the entity.
Yeah.
Paul, anything you want to add on that before I jump into who is a reporting company but is exempt from filing?
I'm not seeing any questions yet, so let's jump over to who doesn't have to worry about this stuff.
Okay, so and this is when I get into the large company, I think that's gonna apply to quite a few probably on this call.
Yeah.
So there are 23 types of entities that would be, they are a reporting company, but they are exempt from filing. So they've been carved out. You do not have to file. So we'll talk briefly about nonprofits. I think the rationale here was that, that tax return, excuse me, is already public knowledge. So it's less likely that there's funny business going on. And as Paul mentioned early in the presentation, the whole point of this is to try to identify illegal activity, money laundering, and things like that. As far as banks and brokers go, so these entities are already subject to regulations and reporting. So complying with the CTA would be a bit redundant for those types of entities. So an exemption has been carved out for those. So let's talk in a little bit more detail about a large company. So a large company is a company that has more than 20 full-time US employees. And they're defining a full-time employee as an employee who has averaged 30 hours per week. In order to be exempt under this, you have to meet each one of these criteria. So the company has to have a physical office in the US and annual sales of $5 million or more. And those annual sales are determined, you're looking at your annual sales in the same way that you calculate your gross revenue for federal income tax purposes. So if you're keeping your books on an accrual basis, but you're reporting for tax purposes on a cash basis, you're looking at your cash basis gross revenue. And the minute those sales jump up over that or fall below that 5 million, you are now a reporting company and you have to file. So inactive entities, I think this is probably going to catch a few people. So if you formed before 2020 and you have no assets or income in the prior 12 months, then you are not required to file. However, if you have foreign owners, you must file. If you have an ownership change in that entity, you must file. And if you have, say that you formed prior to 2020, you haven't had income in years, but you've got $100 sitting in a bank account. When they say no assets, they mean no assets. I don't think there's any sort of threshold. So if you have $100 sitting in the bank, you're going to have to file. It's really impossible to sum up all of the nuances here in the hour that we have. But I'm going to show you at the end some resources where you can read, again, everything that's out there. We'll show you, we'll give you access to some of those resources. So I think Paul's going to talk about some of the maybe not so obvious reporting entities, unless we have questions that need to be answered.
Not seeing any questions at this point. So we've told you about who needs to report, who's exempt from reporting. There are some not so obvious situations that are going to snare some entities that have been formed that are going to need to report. And probably one of the biggest ones is homeowner associations. And you wonder, well, who owns a homeowner association? Really, nobody owns a homeowner association, but there's going to be somebody, maybe the board president, somebody who's controlling that entity, and homeowner associations are required under these rules to file a BOI report. So I know, I think there was a question came in and said, well, what about a nonprofit homeowner associations? Well, there's no such thing. Homeowner associations under the law are not considered to be nonprofits that we showed as being exempt. Those are more about charities and social welfare organizations, the typical 501c type of entities. Homeowner associations, I don't remember the code section they fall under, but they're not 501c organizations. Probably one that's going to catch a lot of people, and I want to do a little bit of compare contrast here, are these single member LLCs. Those are LLCs that are reporting entities. So you might remember a couple slides back, Robyn mentioned, well, if you're a sole proprietorship, you don't have to file a BOI report. Under IRS tax rules, a single member LLC that's conducting a business is taxed as a sole proprietorship. But for purposes of these rules for the BOI reporting, it's still an LLC, still has to file a report. And farmers, that a couple slides ago, Robyn mentioned that farmers don't need to report BOI unless they are formed as a single member LLC or any kind of LLC. The point is, if you have gone out and created an LLC because you own a couple of rent houses or maybe just one, or you formed an LLC because your operating business operates out of real estate that you own through a separate entity like an LLC, those LLCs are going to be reporting entities that need to file these BOI reports. So that's going to be a little bit of a surprise for a lot of people. Subsidiary entities, say you have a partner, a parent subsidiary type of relationship where you have a multi-level tiered structure of entities. Those subsidiary entities also have to report unless the parent entity that owns that subsidiary meets one of the exemptions that Robyn talked about earlier. And interestingly, Robyn talked about the large company, the folks that have more than 20 employees, they're in the US, they have more than 5 million of sales, that they're exempt. They don't have to file a BOI report. But what happens when a large company is no longer large? Let's say you had 21 employees, and so you're exempt, and this afternoon 2 of your employees walk out the door and they're going to go work for somebody else. You now have 19 employees. You're no longer a large company, and you basically have 30 days to file that BOI report, removing that exempt status and filing like everybody else with a BOI report. So that large company can be a trap for the unwary, something to watch. See, we do have a question about if an HOA is filed, who would be the owners? We'll get into that in a little bit when we talk about who beneficial owners are, because there are objective beneficial owners and there are subjective beneficial owners. So I'll try to make sure we answer that question before we get too far. So as we saw early in the presentation, when we looked at the actual BOI submission form using the portal, there's basically 3 groups of people or 3 groups of organizations that get reported on that BOI report. And we're going to get into each of these in detail in the subsequent slides, but you provide information about the reporting entity, you provide information regarding the beneficial owners. And again, there's two types of owners. There's objective owners and subjective owners. And then you also supply information about the applicant, which is the person who formed the entity. And we'll get into that in a little bit more detail. So Robyn, if we want to talk about what is this entity information?
All right, so I'm going to see if I can steal your screen. Paul, are you seeing the PDF?
Yep, it's right there.
Okay. So this is, Paul's shown you what the online filing platform looks like. So this is a download of the PDF. So you've got your same tabs across the top here. So we're going to jump over to the reporting company. So this is the entity information and what gets reported. I do want to make a note that if you're wanting to obtain a FinCEN ID, this is how you would go about it. You can mark this box, and once you submit this report, you'll be issued that identifier. The other thing I want to point out, when you hover over a field, the instructions for that field will pop up. So it's very helpful. So what gets reported for the entity is the legal name, and that's going to be the name that's recorded in the entity's formation documents that are on file with the state. The tax identification type, and you can use either an EIN or a social security number. So if you don't have an EIN, so let's say you're that single member LLC, not filing a federal income tax return, no payroll, you never had a need for an EIN, you can just use your social security number. So you'll enter that information here, and then the jurisdiction of formation. And note that, once you enter certain information, it grays out areas that then become non-applicable. So when we've entered United States and a state of formation, section C through G here grays out to let you know that you don't have to complete anything else in this section. And then they're wanting a current U.S. address, so business, place of business, and a P.O. box is not allowed. So that's pretty much it. That's what you're reporting for the entity. So we're going to talk now about, and Paul, if you want to go ahead and grab my screen and start sharing the, we're seeing you, Paul, sorry.
Yeah.
Is that what you wanted?
Let's see. Can you stop sharing? I think
I did. Yeah, I stopped. So we're seeing you. So if you now want to share the presentation again.
Yeah.
But we're going to talk now about the beneficial owner information. And I think this is where the complexity comes in, is determining who is or who are your beneficial owners. And so there's two types of beneficial owners. We have there's an objective test, and then there's a subjective test. And so, like a good business partner, I've asked Paul to discuss the subjective test in a minute. I'm going to take the objective test because it's a little bit easier. So we'll start with the easy part of the objective test, and that is a direct owner. So if I own 25% or more of the stock or partnership interest, whatever it is, then I am a beneficial owner and I get reported. And we'll talk about what information gets reported in a minute. You've seen a preview to it. Important to note, and I think this is especially important for our Texas clients because we live in a community property state, absent a separate property or partition agreement with your spouse is also considered to own that property. So both spouses would be considered a beneficial owner and must be included. So indirect owners, it gets a little more complicated. Indirect owner refers to a situation where the individual owns the entity through an intermediary entity rather than holding that interest or those shares directly in the reporting entity. And your beneficial owner is an individual. It is not an entity. So if you have layered ownership, you have to trace that ownership to identify the individuals that ultimately have that 25% or more ownership. So let's say, just a quick example, let's say I own 100% of a single member LLC, and that single member LLC has a 25% interest in a partnership. You don't report the single member LLC as the beneficial owner. You report you're the individual is the beneficial owner.
And Robyn, if I can
Yeah.
just emphasize that, because we've mentioned it a couple of times. Again, the whole purpose of the Corporate Transparency Act is to understand who the individual is that's pulling the strings. And so that's why FinCEN's not so concerned about the entity that owns 25% of that business. They want to know the person behind that who's really controlling things.
Yeah. And so, like all good, government rules and regulations, there are some exceptions. So there's some exceptions to the definition of a beneficial owner. One is minor children. Now, that doesn't mean you don't report, but you can report the parent as the beneficial owner rather than the child. And then an employee is not a beneficial owner under the objective test. Now, they might be a beneficial owner under the subjective test that Paul is going to talk about in a minute. But just by virtue of that employer-employee relationship does not make them a beneficial owner under the objective test. And nor is a creditor a beneficial owner just by simply having a right to a repayment from the company.
Now, it may feel like the creditor's the owner, but
yeah,
under these rules,
right?
no, they're not.
That is
not.
True. That is true. So I'm going to turn it over to Paul for the subjective test. So that's the really fun part. Good luck, Paul.
Yeah. I was going to say, if you haven't picked up on it, the reason Robyn and I work so well together, Robyn's somewhat black and white, and I am gray all over. So, and not just my hair. But this whole subjective area really turns on this term about control individuals. Who's actually, somebody might be a 50% owner, but is there somebody else that's really controlling things here? And we're not going to be able to drill down on this in precise detail, but FinCEN's provided some general guidelines as to who might be a control individual. So, senior officers, think about the C-suite officers, your CEO, your CFO, your COO, those types of officers are probably controlling. They're running the business day to day. You might have a general counsel on staff that's handling some internal legal work. Well, chances are that general counsel rises to the level of someone who's somewhat in control of the organization. Your board of directors, maybe not advisory members of your board of directors or ex officio members of your board of directors, but perhaps elected board of directors are certainly overseeing the company if you have a board of directors. And then you might have people that just employees who are, again, senior officers and general counsel, those might be employees. So, earlier Robyn said employees aren't objective beneficial owners, but here they could be subjective beneficial owners. And you get people who are involved in mergers and reorgs, negotiating contracts, approving budgets, whoever those particular individuals are, whether it's a controller, a bookkeeper, a CFO, if they're having influence over what are called important decisions, they could be beneficial owners that need to be included in the beneficial owner report. So you can think about a company that's 100% owned by an individual, and you think, well, that's easy enough. That's the only person we need to report. But who else in the organization is involved in running the organization? And the question will be, do they rise to the level of being a subjective beneficial owner for reporting purposes? We are getting some good questions here. Hopefully we'll be able to get to those, but let me keep rolling on until we get to a stopping point.
I'm working on them, Paul.
Oh, okay, great.
Yeah.
So again, there were 3 pieces of information that needed to be provided in the beneficial owner report: the entity, the beneficial owners, and then the applicant. And so that's what this slide summarizes is, who is a company applicant that has to be provided. Jump down to the bottom of the slide, though. Let me remind everybody that this applicant reporting is not required if your entity was created before 2024. This is only applicable for any entities created during this year and into the future. So for those types of entities, they've got to disclose who the person was that filed that creation document with the Secretary of State of whatever state that you're in, and the person who directed the filing. And it could be one and the same. Could be the same person. It could be an outside a law firm attorney that you worked with that took care of all of that information. One of the questions is, well, what do you do if you used LegalZoom to form your entity? Is LegalZoom an applicant? And FinCEN has responded about that where you're using one of these automated legal platforms to form a document, whoever the person that's tickling the ivories on the keyboard, that's the applicant, not LegalZoom or somebody in the mailroom at LegalZoom. They're not the ones who are the applicant. It's the person who used LegalZoom to get all those documents done. So it was nice that they clarified that particular item, because that was just a little bit troubling on that. Let's see. Okay, Robyn.
You turning this back over to me? Sorry,
Yeah.
I was over there reading questions.
You're right. Yeah, these are great questions.
So where are we? Okay, so we've talked about who needs to report. So let's talk about what they report. And Paul, I'm gonna see if this works.
Okay.
I'm gonna try to snag your screen and put the actual form back up. So we just talked about company applicant. So now we're over here on the beneficial owner information. So note that this is where a FinCEN ID comes in handy. So as it is right now, all of this information has to be entered. So your legal name, your date of birth, residential address.
No PO box.
No PO box, your identifying document type. This is where you would enter state issued driver's license or a US or foreign passport, and all the information related to that. So if I have a FinCEN ID and I enter it, see how those grayed out, including the add attachment? You don't have to do any of that because your FinCEN ID is already attached to your legal name, your date of birth, your address, and your identifying document. Paul, did we get an answer to, so when we were discussing yesterday,
yeah.
Do you update your FinCEN ID, and then does that trickle into the BOIs that you, or the reports that you filed?
So let's,
do we know?
So something that Robyn and I were talking about yesterday, and I actually submitted a question to FinCEN about this particular issue. Let's say you're a beneficial owner for 6 different companies, and you sure as heck don't want to share your personal identification information with 6 different filings. And that's one of the reasons for doing a FinCEN ID. You do it once and you're done. And then you use the ID number to share that information with other filings that you might be involved in. So the question came up is, if your address changes, if your driver's license changes, if something changes with your personal information on this screen and you have a FinCEN ID, you got to go back in and update your ID and update that information with that ID. And what Robyn and I were talking about yesterday was, well, so does that automatically update all 6 companies? And I couldn't find anything in the FAQs about it. I sent a request in to FinCEN. I got an answer way early this morning. I guess they're on Eastern time, that indicated that no, the reporting entity still has to go in and make that change as well. So you've got to change your personal information to update your FinCEN ID, but the reporting company as well is going to have to go in and update their report as well.
Okay.
Robyn,
So,
one of the questions came in, and you may have answered it. If you go back to the top of this page under the applicant, can the applicant apply for a FinCEN ID?
Yes.
They sure can. Okay.
They sure can.
Cool.
Yes.
Okay.
Yes.
Yeah.
Yeah. So Paul, I think if you want to put the, I'm going to stop sharing, and if you want to put the presentation back up, I think you're going to talk about when to report. That question just came in as well.
I was going to say that question just came in. You beat us to the punch.
Yes.
So yeah, this summarizes when to report. So companies formed before 2024 have all the way up until January 1 of 2025 to file their initial BOI report. The deadlines start getting shorter and shorter as these rules phase in. So if you have a new entity that was formed during this year, again, LLC, corporation, whatever it might be, you have 90 days to file your initial BOI report, 90 days from the date the entity was formed. And then after this year in 2025 and forward, new companies have only 30 days to file that initial report from the time the entities change. So, you know, I think as we go through here, it's like exercise. The more we've done this, the more we've been exposed to it, we're going to adopt this rhythm. And I think the attorneys will probably be good about when they're helping a client form an entity of being cognizant about these increasingly tight timeframes for reporting. Also, if you have to make any changes to a previously filed report, again, a driver's license that expires, a passport that expires, an address change, a name change, any type of change that needs to be reported. Maybe you were a large company and you were exempt, and those 2 employees walked out the door and you have 19 employees now. All those types of changes have to be reported within 30 days of when they occur. So again, that's a tight time frame that you know, over time we'll all get used with that. The important thing to know is once you file that initial BOI report, assuming there's no changes, you're done. This is not going to be an annual April 15th kind of filing situation. Once you file the initial BOI report, you're done, unless something changes. And then you got to make those changes within the 30-day period of time. Let's see. So, you know, we're getting close to the end here. So if you do have questions, make sure you're populating the Q&A, but we're getting close to the end here. I think it's always, you know, to give everybody sort of a to-do list, some takeaways from this presentation. So we wanted to provide what we think are the next steps, particularly that we had 86% of the attendees that said this was either the first time they'd heard about it or they had heard something about it. So for those 86, 90% of the participants, you know, begin to decide who's going to file that BOI report. You know, are you going to try to do it on your own? Are you going to reach out to the attorney? Are you going to contact your CPA to do it? Is there somebody else who's, you know, somebody else? Make a decision as to who's going to do it. And I'm just going to jump to that third bullet point and reemphasize, if your entity was formed before 2024, remember your initial report is not due, or it's due on or before January 1st of 2025. And, you know, today's the end of May. You have 7 more months to file this initial report. Don't be in a rush necessarily to file the report today and then have something change a month from now. And now you got to do it all over again. There is no harm. There is no harm in waiting until December to file your initial BOI report, because you don't know. I mean, there are efforts in Congress to maybe defer, delay, repeal this Corporate Transparency Act. There's a federal district court for Northern Alabama that the judge said this act was unconstitutional. Of course, that only applies to that Northern District of Alabama for now until U.S. Treasury can appeal that decision, which may wind up going to the Supreme Court. So the point is, you don't need to hang up on this call and feel pressure that you've got to get that initial BOI report filed tomorrow. You have time to do this. But going back to the first bullet point, you need to decide who's going to play the point on this and who's going to take charge on it. The second bullet point, we see no harm in getting that individual FinCEN ID. In fact, let me just pause right there and just show you, assuming I still have it here. Here we go. And this is one of the PDFs we can, and we'll talk about resources and getting this information out to you. But FinCEN has this quick reference guide on how to apply for a FinCEN ID. It's only 2 pages long. Probably takes 2 minutes to get your FinCEN ID. Probably the most difficult part is if you don't already have a login.gov account, you will have to create that before you can even get to the FinCEN ID. But again, it's not a very laborious undertaking. And we just think from protecting your PII or your personal identification information, it's just a smart move to get that. Okay, I tried to share and something didn't happen there. Let's see. Oh, went to the wrong screen. No wonder.
Paul,
Okay.
I've got a handful of questions I'd like to answer live.
Sure.
I
Heck
think
yeah.
I've confused people on the the attributing to spouses and all of that. So to clarify my point about spouses being included, even if they're not listed, that is specific to community property states. So Texas is a community property state. Colorado is not.
Yep.
So in Texas, we're deemed to own what our spouse owns, whether our name is on it or not, basically. And so if I'm in Texas, and if I own 30% of an entity and my husband and I do not have a partition or separate property agreement, he is also deemed to own that interest. And so both of us would have to be included as a beneficial owner. So that's going to depend on what state you live in and whether or not you have a separate property agreement. So let me know if that doesn't answer the question. And then somebody's asking, it doesn't seem like I can edit a BOI report. So if you have an update, so if you filed direct online and submitted that way, you cannot edit your report. So if you have a change, you have to start all over. If you have downloaded the PDF and filled it out and uploaded it, and you have a change, you can just go back to your saved PDF, change whatever needs to be changed, and re-upload. So that's one of the benefits of using the PDF, filing option. Okay, Paul, sorry, did you have anything to add on any of that before we move on?
Yeah, I was just going to mention, the watch out for the fraudsters. Even the FinCEN site has an alert about that. There's folks out there that are reaching out and saying, hey, we'll fill your BOI report for free. Just, give us your name and your address and your identifying information, and we'll take care of it for you for free. Well, all that personally identifiable information, or PII, is extremely valuable to people on the dark web. And so there are folks out there that are seeing this as a gold mine opportunity to trick people into turning over all this very valuable personal information for nefarious purposes. So just watch out. Don't fall for somebody that, if it's too good to be true, it's probably too good. Just watch out for those fraudster situations. And, there are some penalties for willful violations. I've been through some presentations where the person's like, you could go to jail for this, or, $100,000. Well, wait a minute. These penalties are for willful violations. And while I'm not an attorney and I don't know the legal definition of what is a willful violation, frankly, if you're on this call, if you're on this webinar, you're just not in the bullseye for FinCEN, okay? You send in a BOI and shoot, you put Boulevard instead of Avenue, you need to go make the change. But don't worry, Treasury's not going to be knocking on your door next day to haul you off to the big house. Just follow along and comply with the law. And they're really looking for the people that are not going to do this stuff, and then they're going to try to track them down. So we're not going to be an alarmist here and say you could get penalized, you could go to jail. But hey, you could if you're a bad actor. Let's see. I think we have one. Oh yeah, the resources. Yeah, take it away, Robyn.
Oh yeah, so we're going to send out this presentation, and these are live links. So that first link will take you straight to the reporting hub that Paul has been showing you throughout the presentation. And then there's a link, I think it's where Paul just was, to show you how to obtain your FinCEN ID should you choose to get one. And remember, that's optional. We've got a lot of questions coming in about that. You don't have to obtain a FinCEN ID. I would recommend it if you own multiple entities I would go ahead and get a FinCEN ID. It's going to save you some time.
Yep.
So yeah, so there's all these are live links, and then our information is at the end on the last slide as well. So, you know, if you have any questions. Oh, and I think Paul's going to talk a little bit about, Paul, are you going to talk about how we're going to offer this
Yeah.
service?
Yeah, I
You
will.
know,
But first, I was going to launch. Oh, so let me just finish up the last point on here. We are recording this webinar. We are going to put it out, and we're going to put it out on our YouTube channel, which is Have an IPA with a CPA. So I've got that information here along with a link. Give us some time, though. You don't upload these long videos that quick, but we'll probably have it up in that channel here by the end of the day. So that'll be out there. But I did want to, before we wrap up, I did want to launch another poll. So now that you've sat through, let's see, we've been going at this for, gosh, an hour and a half. Sorry, folks. I know this, I'm sorry, no, just an hour that we've been going, and we're close to wrapping up. But now that you've attended this webinar, how confident are you now about filing your BOI information? You're either good to go. I'll play with it and see how it goes. I'll give it some thought and get back to you. Help me, is the last one. So yeah, this is kind of an indication, Robyn, of how good we did.
you're right. No pressure.
Yeah.
I like these results though. Yeah, okay. All right, that's great.
You know, one thing that Robyn and I will share with everybody, one of our observations, and I've mentioned this to several people, as I think we've shown, the actual process of filing is not that hard. The
No.
devil is in the details of what needs to get reported. So, you know, once you get that information, as far as going online and filing, not a big deal, but getting to that point of what to file, that's where the devil is. And you know, everybody's going to have to wrestle with that, and you know, everybody will provide help that we can. So anyway, let's see, in the poll, share results. So we have about half the crowd that says I'm good to go. Wow. I mean, to go from 86% who said either I haven't heard of it or I've heard just a tiny bit of it, that, you know, 50% of the participants are ready to go with that. But remember, you don't need to be in a rush. So you've got until January 1st of 2025 to file that initial report. 43% say they want to play with it a little bit and see how it goes. And that's really great. So that's super to see that. Okay. Let's see, pricing for the services for entities formed before 2024. And again, you're going to do, this will be your initial report. You have until January 1 of 2025 to actually file that report. We think there's some great do-it-yourself options out there. As we've shown you, you can do a direct submission, totally free, do it on your own time. There are some third-party platforms like LegalZoom and Tax 1099 for a couple that we've seen that will help walk you through that process for a fee, obviously. There are some outsourcing options available too. You know, we would say be sure and contact your attorney who helped you form the entity or who works with you on typical corporate business matters. Contact them to see if they're taking these types of projects on. And you know, we are offering this service for our existing clients that need help with their BOI filings. And we'll just, you know, our it's a flat fee that we quote. It's $825 plus $75 per beneficial owner. There are some services that come with that. There's an annual subscription so that if somebody's driver's license expires, the software that we'll be using will automatically notify individuals about that. There was a question that somebody said, will the BOI portal notify people when something expires? No, they won't. They're a repository. They're not going to have interaction with that. But through some of these third-party providers, including us, there is that feature where once we put that information in, it will trigger alerts when things are getting ready to expire, like driver's licenses. For new entities formed in 2024, again, there's that 90-day reporting deadline. Other than doing it yourself, the first thing is to discuss with the attorney while they're forming the entity if they're going to take care of that BOI piece for you as well. Those are much more difficult for us to track, obviously, on our side. And that's it. Q&A. Let's see. We do have some questions out there. Robyn, I don't know if you've had a chance to. I see you're working on some of them.
I'm looking. Let's see. Does a board member that does not have 25% ownership need to file? That person may be a beneficial owner under the subjective test of control. So that's a possibility. Regarding spouses of owners, if they're listed in Colorado as a beneficiary, then they would have to report. So they're a beneficial owner if they own 25% or more. So I'm not sure if I'm answering that. I'm not sure I'm answering that question.
And again, Robyn mentioned this earlier. Colorado is a separate property state, which means your record ownership is considered to be your property. So if one spouse is listed as the owner of the business and the spouse isn't, then the spouse isn't, at least as far as a Colorado entity is concerned, isn't required to be a beneficial owner unless they're a control individual and they're running payroll or running accounts receivable and payables and paying bills. And, if they have a role in the business that makes them a control individual, then yes, then they're a beneficial owner.
So Paul, here's a good question about my example of the 30% ownership. So is each spouse attributed 15%? Thus nobody is 25%? That's not the way I understood it. Do you, I may have to get back on that.
I'm not sure. It says it's referring to that situation, and I'm not sure I know what that situation is.
Oh, it's the example I gave where I said, okay, let's say I live in Texas. I own 30% of an entity, no partition agreement with my spouse. My understanding is that we would both need to file, that we are both considered owning 30%, not each of us considered owning 15%. Falling, that would put us under the 25%, and then nobody would be reporting. That's not the way I understand it.
Yeah, I mean, the way I understand community property is each spouse is considered to own an undivided interest in the whole. So each spouse is considered to own an undivided interest in that 30%, and I think that would make them objective beneficial.
Thank you. You said that much better than I did. Much more eloquently. Yes, that's what I get for throwing out examples off the cuff. But yes,
there you go.
Great question.
So again, we'll have this recording on our YouTube channel. If you would like a PDF of this PowerPoint presentation with those live links, if you would like, let me just show a couple of quick items here. If you would want this this PDF, this quick reference guide, which of course you can get from the FinCEN site, but if you wanted us to share this with you, we can. If you want a fillable PDF of the beneficial ownership information report without having to go to the BOI site and download it, we have these items available to you, and we can share those with you if you'll just shoot us an email here. Email either one of us or call if you want any one or all three of those particular items. We don't want to be spamming people with information they don't need, but if you did want that information, just shoot us a note, shoot us an email, and we'll get that information out to you right away. Robyn, anything else?
I don't think so, Paul. I don't see any more questions that have come in.
Yeah, looks like we've answered all the questions.
Oh, here's one. Oh, it says thank you. You're very welcome.
Well, thank you so much. We're happy to do this. So yeah, I think we're good to go, and be sure to let us know if you have questions.
Yeah, thank you guys for attending.
Have a good day. Bye-bye.
Thanks, Paul. Bye.